Good morning, traders. I hope y'all had a wonderful 4th of July yesterday. Wow, Mike, your neighbors finished shooting fireworks at 3:30 a.m. I think our neighborhood quieted down about 1 o'clock a.m. So it was a late night, had the grandkids for the last 2 nights, but we had fun. Here in Florida, we were dodging rain and storms. So it was not ideal to shoot off fireworks. We bought tons of fountains and actually shot them off during daylight. So not ideal, but we had to time it for about 45 minutes of no rain and storms. Mike. Yeah, my dogs do not like the fireworks at all. They hid in the closet. So all right, I'm going to share my screen real quick and get started with the potential swing trades going into this coming week. It, I checked the economic calendar. It's a pretty quiet week, really, overall. Honestly, the biggest things is FOMC minutes on Wednesday and unemployment claims Thursday, I believe. Other than that, we have some minor economic data coming out and some Fed speakers sprinkled throughout the week. So, pretty underwhelming as far as economic data is concerned. ES and NQ both making new all-time highs all last week. My focus is still to buy the dip in this very bullish market. Every week, I check to see what areas of the market are leading, have the most strength, and for this week, it is SMH, so the semiconductors, XME, metals and mining, XLK, the tech sector, JETS made it back on the list from a 3-month look back and a weekly look back. They're both those time frames, they're in the top 5. So Jets made it back on my list earlier in the year. They were on there quite a bit. Regional banks showed some strength from a monthly look back and a weekly look back. So I put a IWM name on the list for this week. And then other than that, home builders, ITB, also from a monthly and weekly look back were strong and outperforming other areas of the market. So I now have 6 names to share with you. I want to point out I also watch the Buzz ETF and the FFTY, the Innovators ETFs. And if you're part of the trendy room at Simpler Trading, there will be a bonus 2 charts from those sectors that I will share in my note in the notes section, all where I share all my charts, all my trades, my plans, and all of that. So let's get started first with the name I picked off of the SMH semiconductor sector. I'm looking for a potential setup in AMD. AMD overall is not making new all-time highs, nowhere close. You can see on this weekly chart that their all-time high is 227.30. If I draw some fibs as to where they're at, relatively speaking, they're coming up on that 5618 golden pocket that I use. But they have been showing relative strength with the rest of the semiconductor sector. So I decided to go on a daily chart and measure this uptrend, current uptrend that started about June 16th, it looks like here. And I went and found that 5618 area. This is also a demand zone on the 4-hour time frame, and I have several trendy indicators in this zone that give me confidence because I have a confluence of indicators all in this level to buy the dip here. So my plan would be to scale into the trade. I'm looking to start a position right here near 132.77 and then add to that position at or around 129.23, and a stop would be a daily candle close below 125.77. All right. As far as targets go, the first target would be up here at 144 to 147.75. And then if bulls can push price above this current supply zone, I would be targeting 156.74. My plan is to buy the July 18th 132 or 130 calls. The risk is $7 and that initial reward is 11.23. So that will be my plan for AMD. What I like to do is set an alert right just above where I would be looking to start the position. And then in the note, I like to write what I am looking at so that I know which time frame chart to go to. So I'm going to create an alert now. That way, if price pulls back to this level, Toss will alert me and then I can go in and execute the trade. So that's my plan for AMD this week. I do not chase price. I have no FOMO. If price comes down to my levels, I will execute the trade. And if price doesn't, then no execution. It's as simple as that. Up next in the metals and mining sector, I chose CMC mainly because it has a good risk to reward potential as well as confluence on multiple time frames of demand. So, my buy zone for CMC is 49.44. This is a lower yearly edge. Lower yearly edges, I love to trade them long term by equity or by leap, so a year plus expiration. Um, but I'm not choosing CMC to trade long term. I'm actually choosing the September expirations because I'm trading this off of a weekly chart. And but I still am interested in this lower yearly edge because a pullback to the lower yearly edge, I now expect it to be support. The monthly mid edge also lines up there, and I have an inside and up candle formation. So my buy zone 49.44 to 47.06. My stop would be a weekly candle close below 47.06. As far as targets go for this trade, 53.42, 56.02, 59.07, ultimately 62.32 to 64.53. Now I'm buying just over 2 months of time to expiration. You can see the monthly ATRs about $7.50, giving me about $15 plus of ATR. So from 49.44, if CMC remains very bullish, then I could potentially hit this upper target by the end of expiration. We shall see. For right now, though, as I trim the position, if I enter here and I've trimmed here, I want to have a break even stop. And then at second target, I like to run Fibonacci retracements and stay in as long as the 38.2 fib holds as support. So that's my plan for this metals and mining company, CMC. September 19th, the 47.50 or $50 calls. The risk is $2.28. The first two reward targets would be $4 and $6.58. So that's my plan for CMC. Next up, I mentioned I put a Russell name in there, and that name is IONQ. This is a very hot sector right now. Let's first take a look at the weekly chart. This is a beautiful rounding bottom where we created an inside and up candle formation here. It got above the 618 of the pullback from all-time high at 54.74. It got above that 618. And when that happens, 85% probability that we will come up and test the 887 fib level. Now, timing being the variable, of course, but I just wanted to point out the beautiful rounding bottom on the weekly chart on this name. And take note, 4121 is that trigger on the weekly chart. So if we come over to the daily chart, you can see that my zone to buy the dip on this name is 4006 by 3593. That's going to line up with that weekly zone that I mentioned. All right, so the plan is this. My plan is to buy the August 15th $40 calls on a pullback here near the lower weekly edge and the monthly edge mid, and then adding to that position. So scaling in half allocation at my first trigger, the other half allocation at my second trigger. A stop would be a candle close below 35.93. Now, my initial reward is just over a 1 for 1. The reason I chose this initial reward and rather than just the supply zone is we have an upper weekly edge here. And you can see that on Thursday we got a topping wick. So this is telling me that there are sellers in this area. So if I start a position down here, I need to be aware of that and go ahead and take some profits here and set a break even stop, ultimately targeting 48 by 54.74. So that is my plan for I IONQ. I thought I was talking about CMC. Give me a second. Sorry. All right. So metals and mining, CMC. We created the inside and up on the weekly chart. Whoa. Nope. Go back to Ion Q. Woo, got confused there. Sorry, guys. All right. So that is my plan on IONQ. All right. You can see the risk to reward. The initial risk to reward isn't great, but the ultimate risk to reward is great. I just want to be protective of my capital here with the overall market making new all time highs. And it is extended, so we could have a pullback and actually would be healthy for the market to have that pullback. So that's the plan for IonQ. Next up is the Home Builders ETF. I chose DR Horton for this ETF. Let me first take you to a weekly chart and we will notice that it is definitely in a downtrend coming up into the bear channel here. You have weekly supply near 140 on the daily chart. Doesn't look much different. You have daily supply at about 139. My plan is to take this rally where we created demand and run Fibonacci to the high, and I find the 650 to the 618. And this is where I am looking to buy the dip. I also have trendy edge confluence in this area, the lower weekly edge, upper monthly edge, as well as the daily EMA cloud, all in this area, giving me confidence to take the trade at or around 128 and a half, then add to it at the 618, the golden Fibonacci level near 126. Stop would be a daily candle close below 125. It gives me a risk of $3.02. The reward is 135.53. That's the initial reward. That is a reward of 747. And my ultimate reward lies in this supply zone that I mentioned, 139 to 154, with a stop here at 145.30, very near that daily 200 SMA, which, because price is below it, is resistance and where I would expect some selling. So after that initial target, I will set a break even stop. But just know supply is the ultimate target for me on this trade. DHI has earnings coming up on July 22nd. That's why I chose the July 18th, because it isn't often that I set through earnings on swing trades. So, no need to buy that extra time, knowing that more than likely I will be out of this trade by July 18th. So, that's my plan for DHI. Next up is JETS, the JETS ETF. And like I mentioned, it is showing strength from a monthly look back as well as a weekly look back. And inside that ETF is Southwest Airlines, which is outperforming the overall sector. It is looking beautiful, coming very close to our upper yearly edge for this year and a supply zone at 37 by 39 and a half. So keep in mind that target for on the weekly chart. You can see here we created a beautiful rounding bottom, and then last week was very bullish for Southwest Airlines. My trade comes from the daily chart. We created a demand down here at 3175 by 3072. That's the zone that I'm looking to buy the dip. And of course, I have my target, which is supply, but a couple of trims in between that target or my buy zone and that target. So buying the dip at 31.75 and then adding to the trade at 31.15. A stop would be a daily candle close below 30.72. My initial target is 34.01, 34.71 for a second target, and the supply zone 35.90 by 39.93. This name also has earnings coming up at the end of July, earnings 724. So again, I bought or would be buying the July 18th $30 calls and trimming ultimate target. giving me a risk of $1.03, a reward of 226 and 294, and obviously the ultimate target would be an even better risk there. So I would be buying the July 18th $30 calls at this level. I will create an alert, put in it that I'm buying a daily demand zone. Now, note that we have a monthly edge mid and a lower weekly edge here, as well as the daily 21 at about 32.65 by 32.30. This could be an area of support where buyers step in and it doesn't make it to my buy the dip zone. So, if you are more aggressive on this name, you could take a starter position in this area. Okay. Just know though, for me, with a demand zone just below, I would just start a position in this area and then add inside of the demand zone. Okay. So that is my trade idea for Southwest Airlines. And up next is Cisco. And by the way, guys, if any of you have a name that you're interested in trading that I'm not mentioning, you can put the ticker name in the chat and I will plot out how I would plan a couple of those trades and what my plan would be. Just let me know the amount of time that you would be buying to expiration because that's going to tell me what time frame chart to set up my trade plan based off of. Okay, so if you have any names that you're interested in that I have not mentioned, please put it in the comments and I will take a look at a few of those and give you my trade plan. All right. So let's talk about Cisco. Cisco has weekly supply at 75 to 82. You do have some areas of resistance right where price is at, plus 71.88. The weekly demand zone lines up perfectly with this weekly EMA cloud at 65 by 60.85. So on the daily chart, I went down and I found a couple of zones that I personally would be interested in trading. Now, Cisco has been very bullish. Tech in general, the NASDAQ has been very bullish, but I do anticipate that we will see that pullback that everyone has been waiting for. Now, I'm not a top caller, so I definitely have not been trying to call a top and buy in puts or go in short. I have found that over the years, that's where I lose the most amount of money is trying to call tops, thinking that price is just too far gone and it has to pull back. So I haven't been buying any puts up in this blue sky area, but just know I do anticipate at least some weakness. Is it going to be this coming week? I'm not sure. But I do need that weakness in order to get a dip in the names that I am watching. So for Cisco, my buy the dip area is going to be here at 67.32 by 66.53. This is a golden Fibonacci from this rally where price just climb, 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 climb. Now we're consolidating. I'm hoping for a pullback to this area. And if I go down to the smaller time frame chart, you can see that I do have 4-hour demand in this area. So I would be trading it off of the daily chart. This is not just the golden pocket for me, but also a 4-hour demand zone. And I have this rising 21 and the 21 setting at the bottom of this zone where I would expect buyers to show up on such a bullish name. So my plan would be to buy the August 15th 6750 calls. I have a risk of 79 cents here. My trims are the upper monthly edge and where we created that inside and down. Price is already all the way back up here. I would take a partial profit here at 68.95, moving my stop to break even on the rest of the position. The next target 69.78, then 71.88. And if price gets above that 71.88, I would just flip over to my weekly supply zone, and that would be the ultimate target. Okay? So, buying the August 15th 6750 calls, a risk of 79 cents, and the reward $1.63, 246, and obviously about 446 above at that next target. And I explained to you how I like to go. Or how I like to stay in my trades by using Fibonacci, the 38.2 level after a trim, but I do have a hard break even stop uh, once we hit that second trim area. Before that, I just create an alert at where I got in for my break even stop because sometimes you can get a quick wick down that if I had a break even stop, it would stop me out and then price would often just turn back up. So at the first trim, I put an alert at where I got in. After that second trend, though, I am comfortable with having a break even stop because I've made pretty good profits on the trade by that point. I'm typically out of half my trade there. And so I am fine with a hard break even stop. I actually had a couple of good trades last week using a hard break even stop, and I'm all right with that, right? A win is a win. And if price continues in the direction that I intended, I can always re enter the trade if the zone that I originally got in the trade holds up. So keep that in mind. Good morning. Good morning to all of you. Thank you for commenting in the comments in the chat here. So, does anyone have a name that you would like to see what my trade plan would be? I would take your requests first, but I'll also talk about, as I often do, the Mag 7 names and some important key levels that I'll be watching in the upcoming week. All right. For Apple, demand on the daily time frame chart down here near 202, you actually have two zones stacked on top of each other where we created inside and up candle formations. Apple has been up 4 days in a row, was showing relative strength to the other Mag 7 names when they were pulling back. Apple was actually rallying. Notice you do have resistance right where price stopped on Thursday, about 214.56, 215, let's just call it. The next area that I would be targeting on Apple is 221.32 by 225. And I just want to take a look here. Looks like for my Apple equity, I had a sell at 220. So that's going to line up with where I would be trimming some of my equity position on Apple. As far as Amazon goes on the daily chart, I give you those supply and demand levels that I'm most interested in. Amazon did create an inside and up here at about 220 by 217.93. The issue and why Amazon is not on my watch list this week to focus on, I like this dip buy. The issue I have is that the reward to supply is so close right here. So rather than using it for a swing trade, I would rather just focus on it on the right setup for a day trade and trade up into 224 to 225 by day trading it out of the PMZ next week. 222, I like that for a dip buy for a day trade. But for a swing trade, you could use 220 by 217.93. All right, let's talk about Google. On the daily chart for Google, Google is in a daily squeeze for those of you that use John Carter's Squeeze Pro indicator. Very, very popular indicator. It is in a daily squeeze. It's right at an area where I would expect a pullback. And the supply zone on this daily chart is 183.61 to 193.69. For a pullback, you can see that I have 172.67 marked. That was the beautiful demand zone here. Now, it did come down and create a higher demand zone on the 4-hour chart at or around 176. So a pullback to this area for, just maybe 2 to 5 day trade is 175.71 to 173.53. That would be a risk of about $2.18. I have my lower weekly edge in there at 174.43. So about $2.18 of risk in this zone. And the reward, of course, would be about $3 and what is that? 29.30 cents, $3.30. And the ultimate reward on this 4-hour chart is 180.72 to 183.83. So Google and Amazon are two names I'm interested in day trading next week. But as far as swing trades, they're just right up against supply and not in an area that I personally would be looking to swing trade. As far as Meta goes, Meta is just kind of dancing here. No real relative strength. Last week, it did make a new all-time high at 747.9. Often, after a new all-time high, you do get a pullback, profit taking up in here. As a matter of fact, I believe, yeah, I got my trim on my equity for Meta, so I took some profits up here, and it looks like other people did as well. You can see here, if I'm looking at this daily chart, you see this beautiful inside candle and then this up. Your daily demand you do have at 714.36 by 702.11. This could be a buy the dip zone on Meta. Yeah, Javenda, also Google is in a monthly squeeze as well. Now, I have Google equity. Joseph, yeah, for Meta, you're right. Meta is expensive if you have a smaller account. And yes, I do buy at the money calls or puts. You can trade the leveraged ETF for Meta, it making it cheaper for, a short-term swing trade, or if you're able to trade spreads, you could do a call debit spread up to the target here of like 735 to 745 call debit spread up there, buying it down here and targeting here. But straight up calls at the money are expensive. I mean, even just for the July 11th, those calls run over $1,000 at the money. So you're right, they are expensive, but utilizing that, uh oh, awesome, JK. Utilizing that, leveraged ETF, that will, give you a cheaper price. Let me just check because I've never traded the leveraged ETF for Meta, but we'll take a look at that and just see. Looks like METU would be the leveraged ETF. Now, I always pay attention to liquidity. That's important, to me. Open interest, does the ticker get enough volume? I don't want to have a hard time getting in or out of a trade. Let's look at, you see the cost here? Not a lot of great liquidity. I would go up to where the highest open interest is if I were trading this, which would be the $40 calls. And it's going to have the same candle structure that you're seeing on Meta itself. You got an inside and up right here, and an inside and up right there. You see it? So buying those, like I said, I would use the highest open interest here, 458, which would be the 40 calls for July 18th. And I would trade it the same way, JK. It or sorry, I forget who asked about this name itself. So, yeah, JK. So buying METU using the $40 calls, you can buy it in this zone or wait for this zone down here at about 41.53. The bottom of that zone is 38.76. I would be targeting 45.32 to 46.11 on METU. All right. Awesome. All right. Next up, Microsoft, talking about the Mag 7s. Another great trade that we got into in the room. We bought the dip on Microsoft. It looks like our last buy was at 350 and it's trading at 500. My last trim on that was 499. My next trim on that would be 524. So Microsoft has just had a great run from down here. Y- This is the 618 of a recent uptrend. Price pulled right back to it. You got this little wick below, but I started buying equity at the lower yearly edge, which I often do on names that I want to hold for years and years and years. So I bought some additional shares at 375 and then some more at 350. Took some trims along the way, obviously. You can see those there. But next trim 524.53. From a swing trade perspective, I would pay attention to 478.21, a pullback all the way to here would feel like the end of the world on Microsoft. But I like the dip by 478.21 to 472.51. Your daily 21 is here at about 482. And then from a shorter term swing trade, your lower weekly edge is about 490. All right. Next up, NVIDIA. NVIDIA finally took out a previous all-time high, and it looks great. The semiconductor sector is on fire. We did make a new all-time high on the weekly chart here at 160.98. That is great. As far as demand goes on the daily chart, and we can look at this together. Nice dip by here if you got a pullback to the golden pocket. That's going to change a little as we made a new all-time high at 160.98, but I will key in on that golden pocket level and then check my lower time frame charts to see if I have confluence of demand on those lower time frame charts. But that new GP is at about 150. All right. So pull back to here. This alert goes off. I'm looking to buy the dip there. Um, Even though NVIDIA isn't on my focus list this week, it is on my watch list, my bullish watch list. And you can see I have alerts on those names. And of course, in the room, I would give that chart and that plan ahead of time if the alert goes off for me. So, beautiful. Look at this. You got a trendy turn signal, big imbalance candle, lower weekly edge in this area. Remember, this is my alert for that golden pocket. Yeah, I would buy the dip here. So just know if you see an NVIDIA trade come across for me, this is a chart that I would be using, and then I would trim at the weekly, or sorry, the monthly edge and the weekly edge. And then my target would be that all time high. So here's your monthly edge, here's your weekly edge. I mean, that you can just call that a zone there. So that would be a risk of about $2.25, and the reward would be about 450 to $8 of reward. So that would be great if that alert goes off. Also, remember, I chose to concentrate on AMD in that same sector. So if I'm already in an AMD trade, swing trade, then if that alert goes off, I would trade NVIDIA more as a day trade rather than over allocating all in one area of the market. I do not do that. Okay. So for Tesla, Tesla is so news driven. It is building into a daily squeeze down here. Tesla's earnings are, let me see, because that can definitely play a factor. Tesla often rallies after earnings. Their earnings are 7/23, July 23rd. I wouldn't be surprised to see some further weakness in Tesla just based on the chart. It's below the daily cloud. It's finding resistance. That daily cloud, that EMA cloud there is giving resistance here. You have your upper weekly edge just above, plus a double stack of monthly edge and yearly edge right here. I wouldn't be surprised, honestly, with earnings coming up in a couple of weeks to see Tesla pull back into this daily demand zone where it consolidated forever before that rally in end of April into the end of May, and then the pullback down to this zone on June 5th. That's when Trump and Elon had their Twitter war. Then a rally back up to supply. And now I wouldn't be surprised to see a pullback ahead of earnings at 285 to 259, and then after earnings, see a rally back up. And of course, I would expect it to go back up to supply. So that's kind of what Tesla looks like. I am an equity holder of Tesla from way lower because I started investing in it in 2020, I believe, 2020 or 2021. So, yeah, but this would be my buy the dip area. And I would caution you, of course, that earnings are the 23rd of July. All right. Yeah. Awesome. Okay, guys, so that's what I am looking for potential swing trades. Like I mentioned, if you're in the trendy room, I'll share a couple of bonus trades. I'm very light as far as positions go. I have a applied digital position on that's taken heat, but as far as the chart goes, I still like the trade. We made a higher low on this weekly chart here. And so I still like the trade. I'm in the trade, and as long as we this cloud holds as support, I stay in the trade. As far as BBAI, wonderful, great, awesome trade. The last contract that I'm in is more than 100% paid for, way more. But my next targets is 847, and then ultimately 985 to 1293. Those are the really only two swing trades that I currently have in this account. TLT is a long term, it's a leap trade, doesn't expire until March of next year. So, not a lot to look at on this name. And I really just tuck it away in a folder under my monitor tab and don't pay attention to it except for once a month, and nothing to see there. So, my portfolio is pretty light, very light actually, with only that break even trade on, and then one fully allocated trade that my capital is at risk. So I'm really hoping for a pullback next week into some of those zones on AMD, CMC, Ion Q, DHI, Love, well, Southwest Airline, and Cisco. Uh, I'm hoping for a pullback. Do I get it? I don't know. If I don't get the trigger, right? If my alerts don't go off, then I just don't take the trade and I wait for the trigger. So that's all I have for this morning. Again, I hope you had a wonderful holiday weekend. Last week was kind of crazy, only 3.5 days of trading, but I'm excited to get back to trading with all of you in the Trendy Room. If you're not a member of the Trendy family and you would be interested in trading with me or Trendy John live, you can get a trial membership. That's a 30-day membership for only $7. And you can see as we put our own money at risk live each day in the market, there's plenty of trades in there, plenty of alerts. We use API alerts. You're alerted within milliseconds of when we get into a trade. Everything is automatic, and we do a lot of teaching in there. So if you're not a member of our trendy family, come join us, come check us out. I think that you will be happy you did. As always, I look forward to trading with you live in the room and also, look forward to seeing you in the upcoming videos this week. If you have not already subscribed to my channel, please hit that subscribe button. And as always, as you're watching the videos, hit the like button if you found the content valuable. That helps with my YouTube algorithm to get my content in front of more viewers, and I pay attention to that stuff to see if what I'm putting out there is valuable. The only way I know is if you like or drop a comment or both, preferably like and comment on the videos. That is what tells me, all right, this content the viewers are liking, and I will produce more content as we go. All right. Y'all have a great weekend, and I look forward to seeing you in the next video. Have a great weekend, guys.